Hello everyone, welcome to lecture 5 of module 5. In this lecture, we are going to deal with the different bankruptcy models, especially the Altman Z model, so that we can find out the bankruptcy of any organization if it is a publicly traded manufacturing firms. So taking up that question, from the following information, you are required to calculate the Z score and we have to comment on the same. Given information is regarding Q Limited, current assets, current liabilities, fixed assets, net income, dividend payment, sales, cost of goods sold, total liabilities and market capitalization. As you know, Altman Z score is used to predict the likelihood of any company going for bankruptcy or not. We will be going to use the formula of publicly traded manufacturing firms, which is equal to where Z is equal to 1.2 x1 plus 1.4 x2 plus 3.3 x3 plus 0.6 x4 plus 1.0 x5. So for this purpose, we have to calculate the different values of x, where x1 is equal to working capital upon total assets, x2 is equal to retained earnings upon total assets, x3 is equal to EBIT, earning before interest and taxes, upon total assets, x4 is the market value of equity upon total liabilities to outsiders, x5 is equal to sales upon the total assets. So we have to compute all these components one by one. To start with, we need the computation of working capital for the value of x1. So we compute working capital from the given information. You can see we are provided with the two components. One is the current assets, another is the current liability. And we know that the working capital is the difference of current assets with the current liabilities. So we compute working capital putting this formula of current assets minus current liabilities. Current assets given is rupees 2 lakh. And the current assets given in the question is 1 lakh rupees. So our working capital is 1 lakh here. So with that, next thing we need is the total assets. As we have not given the total assets as such, so we compute that too. The total assets will be fixed assets as provided in the question 4 lakh and the current assets 2 lakh rupees. So we add the two terms of 4 lakh plus 2 lakh. So we reaches the figure of rupees 6 lakh as total assets. Next, in the row, we need the computation of retained earning. Now the retained earning is retained earning we will compute from net income that is given 80,000, and out of that we paid a dividend of rupees 20,000. So retained earning will be net income minus dividend. So rupees 80,000 minus rupees 20,000, the rupees 60,000, our balancing figure is our retained earning in the question. Next we need EBIT, earning before interest and taxes. As nothing is provided in the question, so what we do is we take EBIT as our net income, which is equal to rupees 80,000. Next we need the market value of the equity and the total outsiders liability. So we first calculate the market value of equity, which would be given in the question in the terms of market capitalization 6,30,000. So I am putting here market value of equity is equal to market capitalization. So the value would be 6,30,000, and the total liabilities in the question is already given 3 lakh. Total liabilities is equal to rupees 3 lakhs. This is the liabilities to outsiders, and then we are also given the figure of sales in the question, that is 10 lakh rupees. Sales is equal to rupees 10 lakh. Putting all these values into different x1, x2, x3, x4 and x5. First we calculate the value of x1, which is working capital upon total assets. Just we computed our working capital is 1 lakh and the total assets value is 6 lakh. So the x1 will be 1 lakh divided by 6 lakh, which will be equal to 0.167 approximately. Now we compute x2, which is our retained earning divided by the total assets. We just computed the retained earnings of rupees 60,000 to be divided by the total assets of 6 lakhs. So we got the value of 0.10. Going for the x3, which is our EBIT upon total assets, EBIT we assumed is equal to the net income of rupees 80,000 to be divided by again the total assets of 6 lakh. We got the figure of 0.133. We compute x4, which is the market value of equity, which is equal to the market capitalization 6,30,000 divided by the total liabilities to outsiders given in the question 3 lakh rupees. So we got the figure of 2.10, and then we calculate x5, which is equal to sales upon total assets, and sales in the question provided is 10 lakh and the total assets is 6 lakh rupees. So we got a figure of 1.67. As you can see, we computed all the values of x1, x2, x3, x4 and x5. Now putting all these values into Altman Z-score formula, so the Z will be equal to 1.2 into x1 is 0.167 plus 1.4 into 0.10 plus 3.3 into 0.133 plus 0.6 into x4, that is 2.10 plus 1.0 into x5, 1.67. What we got here is 0.200, 0.140 plus 0.439 plus 1.26 plus 1.67. So the total of the value is Z equal to 3.709. As you know, the interpretation of Z is based on the three different values. Here we can see that our Z is 3.71 almost, which is greater than the value of 2.99, which we call as a safe zone, indicating that the company is not in the financial distress at all during the next 2 years. So the bank can decide to provide loans to such companies, or the outsiders can predict that this company is having bankruptcy chances least possible in the upcoming 2 years. Moving to question number 2 on the bankruptcy model using Altman Z model is, from the following information calculate again the Z score, and we have to comment on the same. The different informations are provided. So first we put the formula, which is equal to Z is equal to 1.2 x1 plus 1.4 x2 plus 3.3 x3 plus 0.6 x4 plus 1.0 x5. For calculating x1, x2, x3, x4 and x5, as we know, we need the value of the total assets, we need the value of working capital, we need the calculation of EBIT, retained earnings, market value of equity, total outsiders liabilities and sales. So we take up one by one. First we go with the computation of the total assets in the question. First we compute total assets. As you can see in the question, that we are provided with the fixed assets like plant of 3 lakh, machinery 2 lakh 80,000 and long term investments are also given in the question. Then we are given stock, debtor, cash, which is going to be our current assets. Then we have intangible asset in the name of goodwill for rupees 25,000. So I am discussing all these things in the heading of total assets. So our total assets will be plant plus machinery plus long term investments plus current assets like stock plus debtors plus cash and the intangible asset in the name of goodwill. As per the information provided to us, the total assets will be 3 lakhs plus 2 lakh 80,000 plus 1 lakh 80,000 plus 80,000 plus 69,000 plus 25,000 and plus 25,000. Again we reach the figure of rupees 9,59,000. This is our total assets. Now we next component we need is the working capital. Working capital, as we know, the working capital is the difference of current assets and current liabilities So in the question, the current assets are comprised of stock 80,000, debtors 69,000 plus cash balance of 25,000. So the total of the three items is 1,74,000 rupees. Out of these current assets, we have to deal with our current liabilities. Our current liabilities in the question are made of creditors as given in the question plus bills payable plus provision for taxes plus outstanding expenses and bank overdraft. So, putting up the items 55,000 plus 30,000 plus 25,000 plus 20,000 plus 42,000. So, we got the total of 1,72,000 as current liabilities. So, our working capital will be 1,74,000 of current assets and 1,72,000 of current liabilities. So, our working capital is just rupees 2,000. As we computed the two components, next we need is the retained earnings. As given in the question, nothing in the name of the retained earnings. So, we move with the things what is available. As you can see in the question, we are given journal reserve and we are also provided with one more information in the name of profit and loss account. So, I am taking these two items for the computation of retained earnings, which will become the total of general reserve plus profit and loss account. General reserve is of 50,000, profit and loss is 1,32,000. So, our retained earning would be 1,82,000. Next we need is EBIT, earnings before interest and taxes. So, calculation of that depends upon something. So, we go with the question once again. As you can see in the question, we are provided with the information of sales and then we are provided the information of cost of goods sold, which is 75% of sale. So, I am taking here that sales is already given 12 lakh rupees as per the information provided and cost of goods sold is 75% of sales equal to 9 lakh rupees. So, from here we can calculate our gross profit, which we know would be gross profit is equal to sales minus cost of goods sold. So, 12 lakh minus 9 lakh, this rupees 3 lakh is our gross profit, as nothing more is provided in the question. For the computation, we assume that our earning before interest and taxes would be equal to our gross profit. So, we take it at 3 lakh rupees. Moving to the next step. Now, we calculate total liabilities to outsiders. Total liabilities to outsiders, if we see into the question, we can calculate the different liabilities which is given in the question under the name of long term loans 2 lakh rupees. Debentures is also an outsider liability of rupees 1 lakh and we are also calculated the current liabilities. So all these are the outsiders liabilities. So the total liabilities to outsider will be comprised of long-term loan plus debentures plus current liabilities, which would be 2 lakh long-term loans, 1 lakh debentures, and we just computed the current liabilities of 1,72,000 rupees. So the total of liabilities to outsider will be 4,72,000 for our computation purposes. We also need the market value of equity. So the market capitalization is given here, so we will take it as it is. Market value of equity is equal to rupees 10 lakh. Next, now we have to calculate the Z score components. Z score components. First we go with X1, which is working capital upon the total assets. We just calculated the working capital of rupees 2,000 and we calculated the total assets of the company is 9,59,000. It becomes 0.0021 approximately. Then we calculate X2, which is our retained earnings upon total assets. I told you that we computed the retained earning also in the question, which came to rupees 1,82,000. So we take 1,82,000 retained earning divided by 9,59,000, that is our total assets. So we reach the figure of 0.1898 approximately. Then we calculate third component, which is EBIT upon the total assets. EBIT is rupees 3 lakh, which was our gross profit also, divided by 9,59,000. So this figure is 0.3128. X4 is market value of equity, market capitalization, which was given in the question, 10 lakh rupees. To be compared with the outsiders liability, as per the working note, it comes to rupees 4,72,000 and X4's value would be 2.1186. Then last component is X5, which is sales upon the total assets. As given in the question, the total sales of rupees 12 lakh compared with the total assets of 9,59,000, we got 1.2513 approximately. Now putting down all these values to compute the Z score, our Z will become 1.2 into 0.0021 X1 plus 1.4 into 0.1898 plus 3.3 into 0.3128 plus 0.6 2.1186 plus 1 into 1.2513. So after we compute it, we reached 0.0025, 0.2657, 1.0322, 1.2711 plus 1.2513. So after adding them all, we've reached a figure of 3.8228, or we can say it is approximately 3.82 approx, which is again more than the value which is Z score 2.99. Mean again this company is in the safe zone, as value of Z is greater than 2.99, indicating the strong financial health and lowest bankruptcy risk to such company or the organization. Moving ahead to the problem number 3. Problem number 3 is again to calculate the Z score and commenting on the performance of the organization. So we go with the same flow of the steps, but we are also provided with certain additional information in this question. First, so we always required X1. For that we need working capital and the total asset. So my working notes start with the computation of working capital here also. Working capital, which is the difference of current assets and current liabilities. So current assets in this question are inventory, bills receivable, and cash. Inventory is rupees 90,000, bills receivable is rupees 45,000, and cash is also rupees 45,000. So our total current assets is 1,80,000. In the same manner, we also calculate our current liabilities. They are comprises of creditors as given in the question and the bills payable. Only these two informations are available in the question. So we add up the 60,000 creditors and 20,000 bills payable. So our current liabilities will be rupees 80,000. Therefore, the working capital will be rupees 1,80,000 minus rupees 80,000 of current liabilities. It comes to rupees 1 lakh. First component is computed. Now moving to next is the total assets. You can see the total is already provided because it is an information in the form of the balance sheet. So the total assets we know is 8,30,000. So we need not to compute the same. Next we need is retained earnings. Retained earnings, and for that we take up given in the question is profit and loss account, and adding up to it is general reserve. Profit is given 1,30,000 plus 40,000 is the general reserve. So the total is 1,70,000. This is our retained earning. Then we go for EBIT, earning before interest and taxes, for which we are given the profit, we add up the dividend into it, then we add income tax and transfer to general reserve, plus the loss on the sale of plant as given in the additional information, and out of all these we deduct the profit on sale of machine. So taking up these figures, 1,30,000 is the profit as given in the balance sheet, plus dividend is 50,000, income tax is 15,000, transfer to general reserve is 20,000, loss on sale of plant is 10,000, and minus we have to deduct is the profit on sale of machine 5,000. So our EBIT is going to be rupees 2,20,000. Next we need the market value of equity or the market capitalization. So for that market value of equity. In this question, I am going to calculate it because you can see the market price per equity is given in the additional information at rupees 30 per share. And in the question, we have share capital of rupees 3,50,000 at a rate of rupees 10 per share. So we go for this computation, which would be number of shares given in the question is 3,50,000 rupees of 10 each to be multiplied by the market value of 30. So it comes to the value of 10,50,000. And the total liabilities, outsiders liability in the question is unsecured loan provided in the question 1,50,000, 10% debentures 80,000, creditors 60,000 and 20,000 bills payable. So the total outsider liabilities is rupees 3,10,000. As we have calculated all these components, so we calculate the different ratios like x1, x2, x3, x4 and x5. Going with the first, x1, which is working capital upon total assets. Working capital we computed 1 lakh rupees to be divided by the total assets of 8,30,000, the total of the balance sheet. It comes to 0.1205. Next we have x2, retained earnings divided by the total assets. x2, we calculated the retained earnings to rupees 1,70,000 divided by 8,30,000. It is 0.205 approximately. Then going for x3, which is my EBIT upon total assets, and my EBIT we calculated as 2,20,000 divided by 8,30,000, 0.265. Then we compute the fourth component x4, which is market value of equity divided by the total outsiders liability. We just computed the market value of equity 10,50,000 and the outsider liabilities in the question was 3,10,000. So it would be 3.387, and the last component is x5, which is going to be sales upon the total assets. In the question we have a total sales of 9 lakh divided by the total assets of 8,30,000. So this will be 1.084. So we are there to calculate the final Z score. Putting up all these value of x1, x2, x3, x4 and x5 in the Z score formula. 1.2 into 0.1205 plus 1.4 into 0.205 plus 3.3 into 0.265 plus 0.6 into 3.387 plus 1 into 1.084. So we got the value of Z, which is 0.1446 plus 0.287 plus 0.875 plus 2.032 plus 1.084. So the Z is equal to 4.43, which is again greater than 2.99, showing that company is in safe financial zone. So there are no unlikely, we can say there are no chances of bankruptcy of the company in the near 2 years at least, which is given as per the Z score. That's all from my side. Now you are in a position to use the different predictive models, whether it is a DuPont or the Z score model given by Altman, to compute the value of firms in the terms of the bankruptcy, or predictive the values of the financial models used in the different financial decision making process. Thank you so much.